It's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex. I'm making big moves. That's a big move. Big money, big move.
Good morning, guys. Thank you for joining on a Sunday. Good afternoon, good evening, depending on where you're joining in from. And thanks for taking time out on your Sunday. I know we have some exciting topics we'd like to get to. We have Tony from Pounding the Table, Problem Sniper, and Luca. The topics are going to be literally what we highlighted in our flyer. It's going to be around options, trading strategies that these guys employ. I think all of them are traders. I might be the only more long duration investor here. I think Sniper has a few long trades as well as Tony, but on day to day they're trading. And then third topic will be styles and hedging techniques, which is, I think, certainly important for you guys to manage your risk. So I'm going to ask them the same three questions and then hear their opinion on each, and then we will get to some Q&A at the end. This is being recorded, so we'll post the recording once this is over. Before we start, anything we say or talk about are just personal thoughts. By no means are these opinions or financial advice to make any monetary actions and should not be conceived as such. So with that, I'd like to start off with my first question, and I think whoever wants to start first can. The first question I would like to ask is, what are some trading strategies you guys use, some rules you define before you get into a trade, and kind of what have you learned? Some trading strategies you guys use, some rules you define before you get into a trade, and kind of what have you learned in your trading career overall? So whoever wants to start, just I guess unmute and we'll just go around the horn.
All right, I can start with that. Trading strategies, I usually go with, going after naked puts and calls and going way out of the money, not crazy out of the money, but where there is a good risk reward factor there. So that's exactly what I kind of do. And how I kind of do that is with 5 points that I usually take into consideration, right? Some of the things that I do is I draw my levels, which are basically support resistant levels based on how the stock has previously acted. Usually the support or resistant levels at trend lines are what I'm usually looking for the break or whatever. And that's how I kind of strategize my calls and puts. And most of my trading style is reacting that rather than predicting. So that's one of the point that I do. The second is taking a look at the volume. I think volume is one of the biggest factor in my trading style, which also couples with the premiums, inflation and deflation too, right? Like when I see a particular stock trying to break a trend line with the support resistant level there, and there's a volume jump on that particular stock, I see volume inflation and prices on the premiums also, which also kind of gives me a tendency that okay, the traders know where this is going and they are inflating the premiums, and this is a good risk reward situation right here, and that's when I kind of get into thing. That's point 2 and 3 where I'm looking at premiums and the volume. The fourth is basically the flow. I really love looking at the flow, and when I talk about the flow, it's like where is all of FinFit putting their money, and where are the whales putting their money in. I really love looking at that and going back to the chart, volume and things, and trying to analyze if the other points also kind of match. The fifth is macro. I really love how all the news that keeps flying around, and when there's positive news that comes out for a particular stock, there's positive news coming out of that stock every single day. That kind of shifts the momentum in a particular direction. I really love how all the news that keeps flying around, and when there's positive news that comes out for a particular stock, there's positive news coming out of that stock every single day. That kind of shifts the momentum in a particular direction, and helps the stock with the momentum too. So those are my 5 points, and I kind of look for those and check mark each of them and say is this an A plus, A minus, A, B minus, or something like that. But usually these are my 5 points I kind of look for my naked calls and puts that I like to trade on.
Nice. Thanks for sharing that, KT. I think Tony, you want to go next? I guess same question. So what are you looking for when you're looking for options trade, and how do you kind of trade? I guess what's your strategy?
Yeah, it's hard to follow what KT said just because he nailed it right there. I mean, a lot of what he was talking about is very similar to what I do. I guess I'll touch on some of the different reasons why I'll take certain options over others. Like I think, there's a lot of people like KT completely slays weeklies. I also look for like longer term leap plays, and I think those are usually the ones that make me the most money over the year. It's just that I'm able to put more size into those, and you can hedge those strategically. So I'll usually, it's very similar to what I've been saying on Pounding the Table for like the last year. Like I'll look for very good potential bottom zones and on companies that I know, like KT was saying, have upcoming news or have had good news and are down for whatever reasons. Like, like for example, if there was a stock that pulled back to its VWAP and it was holding that anchored VWAP, and it's at like a good volume shelf, because I always look, it depends on like the size, right? The conviction that you have in that trade is how much you'll put in. So like it depends on the setup. So I'll give you like the grail setups I always look for. Something pulls back to like a really strong year-to-date VWAP or a March 2020 anchored VWAP, and then it pulls up to like a good volume resistance or volume support shelf, and then I'll start scanning the options chain. So I'll never spend I never spend over $20 or $15 for an option, like really regardless of what it is. Like I just won't, because it's hard for me to like imagine that thing going to a double or a triple or a quadruple, and like when you're in options, like you're not go 5 or 10%. It's just not worth your risk. So you have to make sure that the math checks out to where, like, let's say like I'm looking at SC right now, and I actually did start picking up some leaps on SC. Like I have some March 260s. I think they were like 13 or 14, maybe $15. I don't remember what they're at right now, but I look around, it's like really good quality companies that I know have pulled back. And then I look at like good support and resistance areas. So like, this 240 range has been pretty decent for SE. And yesterday, or like Friday, turned down 260s. I think they were like 13 or 14, maybe $15. I don't remember what they're at right now, but I look around, it's like really good quality companies that I know have pulled back. And then I look at like good support and resistance areas. So like, this 240 range has been pretty decent for SE. And yesterday, or like Friday, turned down. So I started legging into some. And then like when you get a confirmed bounce is when I'll like pile in way more. Just because like I like to start legging in a little bit as stocks like do go down and start like hitting that support sometimes for like those leap strategies, because that's when you get the cheapest leaps. And as soon as the stocks turn, that premium gets super inflated and starts to run. And so another point to what KT was saying, you always want to watch like the price people are paying, right? Because if you just think of options as like horse race bets, like or just like, I don't know, sports betting and like lines of like plus 150, whatever, those things are kind of told by premium and by like implied volatility. So when stocks are trending down for a long period, that's why people are always trying to catch bottoms like a lot, just because they know that whenever the premium flip, they'll start making a lot of money if it continues and sustains. But I look for like longer term leaps, and then with those leaps, I like to put like short calls on a higher leg. So if you buy like the 250s, for example, like I'll short the 300s or the 290s. So that means like even if like you're starting to leg in at the wrong place, you'll start making money on the leg that you shorted. And what I'll also
That's a spread, right, Tony?
Yeah, that's a spread.
Do you want to like call the option out? That's what's it called? Put call spread,
Yeah.
Or what do you call it?
I mean, it's a call spread, but like you can do a put call spread. Like when I'm buying the spreads like that, that's just like there's debit and there's credit spreads. So like there's when you're trying to make money off of that option going to zero, and then the one when you're trying to make money directionally, just because you think it'll go over that X price. So I do both of those. Like I also enjoy selling just natural premium. Like I'll just go and sell like puts down low on something, or like calls up high. So I'll short like a 280 and buy the 290s or whatever, and then collect a little premium if something's like overinflated, just for example. But there's like 100 ways to skin this cat. Like if you really look around at all these different option strategies, like even on Fridays, something will pull back super, like SC pulled back a ton, and like I bought some 235s towards the end of the day, and those went up pretty well just because it was Friday. But like those are the plays that you don't put a lot of money into, because those are high risk. So I like to I think it's really prudent to talk about the long-term directional options, because I've made tons of money doing that over the last 2 years. And I think that for most people who are starting out, like that's probably a good start thinking about them, just because like what KT does is just remarkable, and like I do some of that trading as well. But on a day-to-day, I think that there's a lot of people who probably are like not as advanced as the master KT. So like get started and like look around at like specific plays. Because if you think about an option, like it really is just like a way for you to leverage 100 shares of something. And you can be constructive with that, right? Like you can buy long-term leaps, and buy shorter term puts and then just hedge both directions, or you could buy, long term leaps and then, do the spread on news. So I think it's just really cool because there's a bunch of ways to make a creative bet, just like buying 100 shares and just having that 100 shares just move however it's going to move. So that's pretty much the way that I do. But I always make sure I get in on something when there's like a good support or a good like resistance breaking out. Like if it's a double top and it's breaking through that, it hit 100 and then it came down to 80 and it's starting to bounce at a nice volume shelf and it looks like it's approaching 100. Like I try to get in before the 100 break, and then you size up after the 100 break, just because that's when the premium will start to flip and then it'll become much more expensive. So I'm always looking for it's a math game, especially with options.
Awesome. Oh, thanks for sharing that, Tony. And before we get to you, Luca, so one thing I'm really, I guess, curious on, if I'm a listener listening to you guys talk, I mean, we talk often and all of us have different styles that we employ around our investments. But since you guys have been doing this quite some time, and Luca, feel free to answer this when you kind of chime in next. Everything you talked about makes perfect sense, in terms of finding support, looking at the options volume, looking at the macro and momentum and all these other factors and resistance and understanding the support zones. But what tools are you guys using and would recommend for someone that's, trying to get better at this? Like, what tools have you used that you didn't like, or, would you both want to just quickly answer that before we move on to Luca?
Yeah, I kind of use a couple actually. Before until 2020, I have my own tool for analyzing the flow and giving me the unusual activity around those names. But recently I switched to Tradeletics, and that is pretty good. That's where I kind of get all my flow and understanding where the whales are putting their money in. They have a very nice tool called Trady Flow. That is pretty good, where they give you the how huge an order is and things like that also. So that's a very good metric that I'm always looking for. And usually I had 100% success rate when an order flow was greater than 25 plus. Very interesting, where where the whales are actually putting their money in, and I've been testing it not with a lot of money, but I've went in it usually comes in very sporadically, and probably 3 came in since the last 6 months. But whenever I put in, it's 100% success rate. The other one is I chart most of my stuff on TrendSpider, and before that I used to use Thinkorswim. I think both are pretty good tools, and that's about it. I just use 2 tools.
Awesome. I think, Tony, you use TrendSpider. Anything else you use, Tony?
Yeah, I use TrendSpider. I use Trade the News too, just because I want news to hit super fast. Because if there's if bad news hits, you should sell instantly for there's news that's pretty clear that's horrible, or that's news that's super bullish. So I want to make sure I hit every headline before everyone else does. So if things get if things look really bullish, I can buy before them, and if things get really bad, I can sell into people. So you want to make sure that you can see in the day, okay, let's say Biden says something or Powell says something, you want to be able to sell into people who are still buying, who haven't seen that news, which they'll see in 5 minutes. So Trade the News is super quick and just see that news pretty instantly. There was a day where it was Powell started saying accelerated taper. You just have to dump everything and then just then you buy it again. So those are and I'm talking options. I don't even want to discuss long-term investing right now, because why right now. But yeah, I mean, if you see something that is going to instant shock the market up or down, that will kill your premiums if you're playing the other side, right? So you want to be less risk on in those situations, or add risk in those situations, depending on what the news is. And also always looking at flows too. I want to see big sweeps. I want to see what KT is saying. I also started using that as well recently. KT, that site's really cool. And Unusual Whales also has really good flow, and Cheddar Flow and Flow Algo. So I'm always looking at between those things. I'm also in just some chat rooms that just have that news posted as bots and stuff. So I'm always just looking for that kind of stuff, just because the news is the most important thing with options, and knowing what the narrative is that day. There was a day the other last week where all the growth names and everything were were just up so much. They were up a ton in the morning, and we all remember those 2 days, and then things reverted back, right? So you have to look at the headlines that did all that. And so I feel news is definitely the biggest factor that drives the narrative. And you could see people just continuing to slam Apple calls, and then Apple just didn't care at all and just kept ripping. So stuff that's really important, just in terms of making sure you're playing options. Because one thing I want people to understand with options is you are not investing. You are simply not investing. So just act like it,
Yeah, no, appreciate that, Tony. Luke, I guess passing to you, same question. How are you looking for options to trade? What are your some trading strategies and rules you employ, and any tools you use as well to make these decisions? And I do see requests still flowing in. We will take some Q&A towards the end. Before we get there, I'd like to get through all these topics that we have on the docket.
Yeah, so first I'd like to lead off by saying the two other guys up here are like phenomenal traders. They've been trading much longer than I have, but I'll go over my strategy and kind of what I look for. So I'm a pretty simplistic person. I like to keep things simple. So I'm going to run you kind of through what I do every single day, kind of how I identify a trade, and then how I use options to leverage my capital. Because at the end of the day, that's what options are all about. It's all about short-term leverage. So what I first do is I scan the market, and I scan the market for some of my favorite patterns. And really the patterns that I have been most successful at trading are these descending wedges, ascending wedges, symmetrical triangles, ascending triangles, and descending triangles. That's really my niche. That's where I find that's my bread and butter. So I identify those patterns in the market. I look for solid volume. I look for not only volume, just like a typical trading volume, but I also look at options and the volume at which those options are trading, because volume is pretty important. You pick an option up, you pick a contract up. If there's no one there on the other end to pick that sucker up, it doesn't matter if you're up 20%. There's no one there to buy it. It's not a good situation. So after I identify those patterns, after I identify solid setups, then what I do is I create basically a game plan. I create an exit, I create an entry, and I determine my time frame. If you don't know your time frame, it's going to be pretty difficult to identify which contract or which option you're going for. So you need to know your time frame, you need to know your entry and exit. And then finally, I start looking at flows. So I look at flows on the names that I have pretty much scanned for and identified. And I look for, within the flows, I look for contracts that are absolutely just getting picked up like crazy. I look for contracts that are, in essence, there's a lot of demand for those contracts. I look for expirations on these orders that are more near term, above ask orders. And that tells me, say you have a contract for a 190 call, the stock's at 180, and the expiration on it is like a month out, and it's an above ask order, that's probably a pretty bullish order. So that's indicative to me that someone is betting big on upside, or at least it seems someone's betting big on upside. And if there's a bunch of those sweep orders in that kind of direction, that's a net positive for me. Also, what I look for is I also factor in social sentiment. Now, some traders don't, some traders do. To me, social sentiment in this market in 2021 is actually a pretty darn major factor. You look at some of these names that have ran an immense amount, and the social sentiment on them creeps up ahead of that, basically out to the upside or to the downside. That social sentiment is creeping up, and then something occurs and the name breaks out. So I also factor in social sentiment. So kind of my checklist is identify the solid setups, lay out criteria for those setups, then go into the options, identify options that are hot, identify basically net positive flows that in essence back my trade. I think of it almost as evidence to back my trade that I'm looking at. And then I also look at, what's social sentiment doing? What are people thinking on this name? Because that's a major factor, I think, in today's market. So I identify all those. Now, a little insight. When I look at an options chain, it all depends on your strategy and comfort level, in my opinion. Everyone has a different strategy. Really, where my bread and butter has been, and I have made quite a bit of money, is I actually go out just outside of the money. So say, a name sitting at 150, I'll maybe go for those like 155, 160 strikes, because I just really like to trade just out of the money, and I typically stay out just over 100 days. To me, that's where I found a lot of success, and I couldn't explain why. But I do know that in my mind, the way my mind works when it comes to risk is the closer I am to action, that risk is increased in the smaller amount of time I have for my trade to break out. So I give myself a little cushion with that 100 days. I like to give myself a little cushion. That's just how I operate. But that's really how I identify a trade. That's kind of what I do every single day. I scan the market for those setups, and I identify setup, build out a watch list. Actually, if you were to look at my watch list, I have three. I have a focus list of great setups, and then I have with strong flow. So I have a separate watch list, and it's names that are on my focus list that are in essence backed, and they have some strong flow action as well. And that's an entirely separate list. And then I have a trades on list. So that's just kind of how my brain operates. It's very analytical and it's very simple. And it's just very snappy, quick, doesn't bring in a crazy amount of outside factors. But that's really how I operate and what I look at. And when it comes to tools, so what I do is I actually use multiple tools. So for flows, I use Cheddar Flow. I found it to be a great tool, and I've had a lot of success with it. I also use ChatterQuant for social sentiment. And then when it comes to charting, I actually use two charting softwares or platforms, you could call it. So for just like charting, basically watch list, all of that, I use TD Ameritrade, Thinkorswim. It's a pretty solid charting platform. I like to use it. And then also to kind of scan the market and go through a list of names that are showing, like, for instance, strong relative strength. I use MarketSmith, and they also have a bunch of crazy sick scans as well that I have found a lot of success with. But that's pretty much it, how I operate and how I identify trades and use options to leverage my capital in the short term. Because, you can go directly with shares. The issue with shares is the leverage simply isn't there, and you need much more capital to get the return that most people are looking for. So options are a fantastic tool if you know how to properly use them and manage risk.
Yeah, I think that actually flows right into my next question. So thanks for sharing that, Luca. My next question would be around managing risk. I guess that's another theme that we have set for the spaces is hedging techniques, right? So again, around the horn, what techniques are you employing? What rules do you set? How do you hedge? How do you protect your capital? I mean, I know Tony runs a fund. Luca, I know you've been doing this also for a little bit amount of time, and same with KT. He's been doing this for quite some time, and I've seen KT's spreadsheets on the amount of money he's moving. It's pretty insane. So, I guess I'll start with KT there. How do you define risk? I mean, no one's perfect, right? I mean, this game is difficult, and there's a lot going on, and I'm sure you've learned a lot along the way. So, what are some techniques you would suggest that someone can simply understand? Hey, this is how I can protect my risk or manage my risk. I know there's the rule of 5%. Some people put in with the stop loss. I think that's some people like that rule, some people hate it because you can lose your position, and 5% and swings can happen pretty quickly. So some techniques that you like employing, and I guess we'll just go around for that. I see a ton of requests coming in. As I said, we will take Q&A once we finish some of these topics, and we'll definitely allow these guys to do some Q&A. I don't know if Tony has time for Q&A. I think he has to run to something, but I think Tony will share his thoughts on this before leaving.
Yeah. So the way I kind of manage my risk is I kind of follow that a rule called the 1-2-3. The way I put in my capital is I put 10% of the max risk that I can put in. And I start cutting off the positions at 20% losses. That's basically my thought when I put in my capital, right? Like when I say I'm putting in 100, like let's say $1,000 is how much I can risk, and then I'm putting in $100 into a particular investment, and I'm going to think that okay, $20 loss is I'm done with this trade. So that's something that I employ. And then I start scaling out my positions from 30% onwards. I mean, with options, you see these 20-30% moves pretty fast. So it's not going to take a long time for you to decide that. Probably it'll take you around somewhere in between 3 hours to around a couple of days. So that's the technique that I kind of follow. And then when I kind of see like a riskier, risk-off kind of environment, like what we are seeing right now, right? Like you see a lot of money flowing into consumer staples and utilities. Like Nasdaq is pretty much lagging in a sense that like Apple and Microsoft are like moving higher, but then you have Amazon, Netflix, Facebook, all of these. Tesla moving lower. So this kind of environment for me as a growth investor is kind of a risk-off kind of environment. So what I kind of do with that 1-2-3 rule right now is when I say I can put in $100 of 10%, which is $100 of my $1,000 max risk, I go down to $50. So now what I can do is I can hold my position longer. Say like I can hold it up to minus 40% or so, minus 50% or so, and say like I can risk less and hold on to this position and see how it kind of works out. based on the whole holistics of the market. So that's kind of some of the strategies that one of my main strategies that I kind of employ when I'm going into a trade. So I define my risk, I define my reward, and then I'm in a trade and I kind of play around with that capital. The other part, what I kind of do with hedging or investment is, um, there are a couple of ways that I kind of built my positions, right? Like Rahul, we've been talking about this, right? Like one of the biggest positions that I have is Apple, and then it's Tesla, and how I kind of accumulated those over time, and I kind of averaged my position down. Like I was averaging up when I was buying, but I was selling puts on these on these shares that I held, and I was kind of averaging down on my position. And over the last 10 years, looking back, that it was one of the best things that I did. And I kind of did that because, I trusted the company, like, and when I'm investing, I always tend to like my investment when I'm averaging up than when I'm averaging down, because it just gives me a feel and confidence that, whatever I have thought of this particular company is working out. So how I kind of negate the factor of averaging up is by selling puts or something like that. And the way I kind of accumulated my Tesla shares was selling calls. And again, let me be very clear with selling puts also. Like I sell puts in a very specific environment where the VIX kind of shoots up and you see a high VIX, and like when put premiums are super skewed, like when you look at the premium chain, you'll be like, the puts will be 3x or 4x times the call options that are out there. And that's when I kind of go and sell puts. And that's exactly what I did the beginning of November too, right? Like I was the previous spaces that we were on, I was telling I'm selling Apple puts because, like it's super skewed, and I would want to collect those premiums and average down on my positions. So that's something that I kind of do. And when I'm thinking of about adding shares or things like that, I kind of sell calls. And if the calls I have to exercise them, I do exercise them at a particular strike. But most of, like, I have been assigned Tesla calls just a couple of times in the past. Rest of the times I kind of like just collect the premiums. I'm pretty happy with it, to average down on my main investment position. So those are the few ways that I kind of play around with my weeklies and monthlies and long term investment and things.
Awesome. No, thanks for sharing that, KT. And I have a couple tweets that you've shared pinned above, so you guys can follow along there as well. Tony, anything to share from your perspective in terms of how do you manage risk and hedging?
Yeah, I'm a big fan of buying different timed options that like go against each other. So like I was saying earlier, like, I'll do long-term leaps, and like in a market like this current market, I'm mostly focusing on like spreads, just because, as KT was saying, that the same reason why he's selling premium, if for positions you're not necessarily like holding long term, is because the VIX is starting to get wild and start popping. And this was like last week more so, but you can make a lot of good money, like not just selling. Like I don't sell naked like KT does. I don't know if he only sells naked. He's a boss, but I like to sell spreads just because if something gets decimated and you're selling puts, and like it's different because like if you're looking to add that position, it's a very different thing. I'm talking about like just strictly trading that position. Like I like to do spreads in case at least it like limits the fact of like if your stock goes down, like DocuSign, like if somebody was trying to sell puts on those earnings and they got wrecked there. So there's definitely like different ways to use the strategy KT talking about, and this different one as well. But I also just like to generally like buy put spreads, or just puts in general on like big pop-ups. So like if I have my long-term positions, and like let's say like one day, like, and this was literally what I did last week, like let's say like I started picking up more Twilio like in the like 240 250 range, and it popped at the 288. So then I bought like 280 and 250 put spreads for like 2 weeks out, because I wouldn't care if those go to zero, because it's at a critical point. Like 288 is close enough to 300 that if it starts running, it will go over 300 and even give it like care at all if my puts go to zero. And you kind of want your hedges to you want them to go to zero as fast as possible. So that way you can maximize your upside. But then obviously like Twilio came back down in reverse. So it was like 288 and then dropped way back down. But within that, like I was able to kind of lock in where that price of the stock, like I'm okay with it going down minus some premium after a pop. I'm always looking for, and especially in this market, like where certain names will have to pop in the morning and then sell off all day. So like I usually just spend my mornings selling stuff, like selling term calls or selling literally anything that has like ran a lot in the morning, just because, something, if it's Monday and you buy an option and then the next day on Tuesday it rips and then it starts selling on Wednesday and Thursday. So by that time, your option's like dead because it's Friday the next day, right? So I'm always looking to secure the bag, for lack of better words, in the mornings on pops, and then use pops to start scaling into hedges. So like right once you're like net up, you want to lock that, and then you want to make sure that if it does reverse, you can make more money on the down, right? Because I do like Twilio and SE long term, and it's like hard to trade those names right now in the current environment. So knowing that we pop and then we drop all the time, it's like the way strategy needs to be played. So I'm always buying puts or put spreads that are, either this week, next week, or the week after. But the point, the key here is that like hedging through a spread, right? Because let's say that it goes down a little bit, but not a ton. Well, that's fine, because the one that I have that's the long will make me money, and the short put will probably make me money too if it doesn't drop enough. But if it drops a ton, then I can start adjusting that spread and say, well, Twilio is like 280. Okay, now it went down to 264 or whatever, and I've got the 250. I can take my 280s, roll those down to 262s or 260s, and then I've collected that 15 minus whatever I paid. And then maybe, my 250 maybe is even, or maybe a little, like maybe it's down a little bit from my short, and then I can roll that to a 240 and like add a week, and it still, you have not lost money because you made money on the spread down and you got in earlier. So like it's always important to like look around and see how you can, I guess, capture that move, because most of the moves, especially in the names, I know like most people, that's why I'm talking about these names, because I know this is what most people here trade. You want to capture the moves, at least right now in the market, because there's no trend. It's just volatility and big money moving it around. So you want to make sure that, especially in this environment, that you are locking in pops, you are locking in drops, and just moving the needle a little bit every time.
Very, very good last statement there, Tony. There's no trend in the current market. Dynamics are really tough, and macro is not giving us a clear direction where we're headed. So we'll definitely be watching FOMC. Actually, I'm going to pin the tweet of all the catalysts I see coming up on here for you guys. So thanks for sharing that, Tony. Very helpful. Luca, same question. Hedging techniques. How do you manage your risk? And what are some strategies you employ in terms of managing or protecting your capital?
Yeah, so, this market, especially lately, as I like to say, the waters are muddy. They're not clear. People don't know what's going to happen. That's why everyone's asking. So what do I do to manage risk? So in essence, really what I do at the end of the day, trading in any manner is all about risk management. So in order to preserve capital, if I take a trade on the bull side, say I think that, a name is going to move, 10 to 20% to the upside, I'm also on the backside of that, I'm going to have a 5 to 10% stop. Now, I use hard stops. A lot of people like to use mental stops. I have always struggled with mental stops, because if a name comes down to the stop and I'm using a mental stop, I'm like, oh no, it can bounce here, and it looks like it starts to find a footing, and then it drops again. So for me, mental stops don't work, because the minute the trade goes the wrong way, my mind starts, obviously thinking, oh, it could bounce here or here, and I go right to those supports, and it just doesn't work. So I have used stops. So typically it's a 5 to 10% stop. I'm very touchy-feely when it comes to these stops, but typically, almost always, it's a 5% stop. I keep my stops tight. I like to preserve capital. I don't care. I'll take, as many trades as I need to, but I keep my stops tight. Also, what I do is on some trades, say I'm on the call side, say I have like 10 calls, I'm expecting upside, I'm bullish. I'll also go onto the put side and I'll pick up a few puts. And that's just a very simplistic hedge. It's a direct inverse to my position. And it protects me as the name. If the name moves to the downside, it gives me time to basically scale out on my calls. And then it could possibly turn into a profitable trade depending on how badly the trade goes against me. So I'll also use that. But typically, for me, it's about being very quick in and out with this market. Really, I have found, to give a little background, the past 2.5, 3 years, this market has gotten much quicker. It didn't used to be this quick, but the moves now are even quicker. In either direction, the market is more volatile. And given that, I like to be very quick when it comes to taking profits as well. So I kind of have a rule. The minute I hit a 20% profit on a position, my mind immediately shifts into basically saying, okay, We need to start thinking about taking profit on this position. 20% within 24 to 48 hours. I'll take 20% on my money any day of the week. So that's just kind of how I operate. So I am very quick in and out of this market. That's how my mind works. I use close stops, and sometimes I'll pick up, say if I'm on the bull side, I'll pick up some puts as a direct inverse to my position. But typically, I am very careful with that as well.
Awesome. Well, I did share the pinned tweet that I was talking about several catalysts incoming. I also wrote a thread on QE and comparing the markets from 2018 to 2021. The catalyst I'm looking at, the macro tape right now, something that Stock Talk Weekly mentioned in terms of tapering versus rate hikes, all these different questions that everyone is trying to get answers to. I'm trying to share as much information and data around it. So everything is pinned. Feel free to check it out. Tony had a hard stop at 12s, as I mentioned, but luckily, we got in all the topics we wanted before he had to jump. Now we will get into Q&A. We've covered a lot, so I'm sure there are tons of questions. I have several requests that already come in, so I'll start bringing you guys up to speak and ask your questions. Before I bring you up, please don't come and pump your own Discord room or ask for buy and hold or sell advice. It's not what we're here to do. We're just here to kind of share our thoughts, research, and our I guess history with investing and trading, and kind of just share our personal beliefs there. And before we get to that, thanks for sharing all that, Luca and KT, as well as Tony. Give all these guys a follow. Give the panelists a follow. These guys spread some amazing information, have tons of knowledge, and if you found this helpful, we'll be doing this a lot more. Our next one's actually a big event with Stock Talk and stock market news, as well as Tony on Wednesday night. So I'll be posting that flyer out soon, 6 p.m. Eastern. So yeah, with that, let's get to some questions, if that's okay with you guys. All right, let me start bringing some people up. I see TSDR. I just noticed you. Sorry, I didn't catch you earlier, TSDR. What's going on, man? Feel free to come up and join if you like to chime in. Let me add some people. All right, options, Ricky, if you want to go first, followed by Unknown, and I'll get the rest of you guys on. I see you. Just going to bring you guys up in couples, if that's okay.
Hey, Rahul, thank you for bringing me on. As soon as
What's
I
up?
saw your title, Options or Trading Strategies, I thought I should listen to it now. Great points by all of you guys. Thank you so much. Definitely learned a thing or two. I just want to share something based on Tesla, the late run that I had in October, and the strategies I did to take advantage of that. If you allow me, I can share.
Yeah, go ahead. I mean,
So,
this entire space is
awesome.
about that. Just try keeping it a little brief. I don't want to get into any tangents, but yeah,
No,
go ahead.
okay, so in November, we saw on November 4th and 5th that Tesla possibly had made a top based on the price action, right? So I did some bear spreads there, right? Sold little part out of the money calls and then bought the out of the money calls to collect premium. And when Tesla fell, like in between 1,050, 1,100, right? I think, and we saw that on 26 October, it was stalling at 1,070 level. There, I took advantage by playing iron butterflies, right? The reason I did those very quickly, because the ratio was in our favor. I did 1,100, 1,200, and 1,000 iron butterflies, where I sold the 1,100 calls and puts, and I bought the 1,200 calls and $1,000 puts. I was getting a credit of $80. Now, that does not happen all the time in Tesla, right? So the ratio was in my favor, 80 to 20. So that's one play I did because Tesla basically just had to trade in the range for 3-4 days for me to take advantage of the time decay. So sometimes when a stock runs up a lot, I recommend that iron butterflies are, you guys take a look at it. And Rahul, I'll let you speak the rest since I just want to keep. But that's one play that I do recommend iron butterflies when a stock runs up a lot to take advantage of the premium because the ratios are in your favor when the time decay kicks in. Thank you.
Appreciate that, man. No, thanks for sharing. Do you have any questions, or we can just get to some other people? Any questions for you, Ricky?
No, I'm actually trying to log in regular, listening to your podcast. So thank you. You guys are doing great. Just love listening to you guys.
Appreciate it, man. Thanks a lot for tuning in. Feel free to stay up here if you want to jump into answer any of these things. If you have some options experience, happy to keep you on. I guess next I'll go to Bio Learner. Wait, sorry. I think we had some guy named Unknown before this. He left. Go ahead. What's up?
Hey, thanks, Rahul, and everyone. I think pros problem sniper said this just on this spaces that you sell puts when VIX is high and and thus maybe stock is down on that particular day. So I just want to, and I do sell puts sometime to collect premiums, the stocks I like. So just want to clarify, and that was interesting what he said, that selling puts when VIX is high and stock is down more on particular days, more profitable strategy in the sense that you collect more premium. So again, I'm new to options, but I would appreciate the more insight in that strategy. Thank you.
Sure. KT, want to jump in?
Yeah, so something that I usually do, especially with what happened to Apple, right? Like Apple was trading at 170 plus, and then it quickly dropped to like 165, 160, and everybody was on puts. And if you looked at back then, when you looked at a couple of weeks out, Apple calls for 1217, they were at around $3.50, and the calls for one, like when you're looking at a skew, when Apple was trading at 160, if you look at the 150 puts versus 170 calls, the 170 calls a couple of weeks out was $1 something, but the puts was around $3 something. Like the puts were 3x of what the calls were, and like most of the time, like these big M&Ms and everybody, they like to sell those to the retail because there is fear in the market and everybody is trying to crowd into these puts, and that's where they jack up these premiums on the puts, on the premiums on the puts, and then like they try to sell them to the retail and collect them, and usually this happens with, like, I'm not talking about the second tier stocks. Like for me, the top tier stocks are basically the Fangman plus T, and those are the ones that I usually trade and invest in. So I'm not talking about, like, Fubo or like, let's say, um, DKNG or things like that. Like I do not know how those stocks move or how those premiums move. I'm talking about all these top tier stocks where, like, falling that far and making that trade profitable. I don't think that is feasible for a stock like Apple. It definitely will result in a bigger market correction, and I don't see that because we are at support levels. If you, like, when you draw those technical points out on a chart, you see that SPY was at a support level. It was at the 50 EMA on the weekly, so which is pretty sorry on the daily. So like, looking at the holistics of the entire market and trying to figure out where your support resistance zones are and why are these premiums kind of inflated so much, you can definitely leverage that, selling the puts and making some money out of it. And how am I covered with respect to that is, I hold long term stock anyway, and if I'm like selling those, if the puts get exercised, I'm totally fine with, like, selling off those stock and then rebuying that back sometime later. So that's kind of my strategy as to why I kind of sell puts at that point. But usually when I sell puts and when the VIX shoots up, I have never experienced a bad turn down at all. Even in March, I was selling puts. Once the VIX shot up, I know the stock was falling. I was selling puts for the end of the year, and look what happened. It was just a V-shaped recovery, and it was pretty good. So yeah.
Thank you so much. I really appreciate it.
You're welcome. Thanks for joining and thanks for listening in. Bini Ha, did you have a question?
Yo, what's up, guys? Sorry, my mic was off.
What's
Good
up,
morning.
man?
Hope everyone's enjoying the weekend.
Good morning.
Yeah, I just had two questions. Couple of stocks that I've been watching really close. One I'm already in for a longer term leap. It's Twitter. I just wanted to hear your guys' opinions on Twitter. In my opinion, the mid 30 billions for market cap is it's kind of laughable to me. I mean, I'm willing to be wrong, obviously, as an investor every time. But in my opinion, I think this has a massive growth ahead. I think it's a gift down here. And second one, I have a question on if anybody wants to provide an opinion is, sorry, Coinbase. I was waiting for 240s, possibly for an entry on 2022 calls, but I did actually take a starting position this week when it closed around 250 or around 255 or so. Just wanted to see if you guys have any opinions on those two, and if you guys have any input, would love to hear your opinions.
I can actually take that real quick, and then if KT or Luca want to join in, they can. But so I'll do the Twitter one first, and then I'm looking for a coin chart. We literally had a Q&A yesterday on Spaces, and someone asked the same question on coin, and there was a chart that Disruptor. Here it is. Okay, So sorry, not disruptor. shared with us. So I've pinned it above. So that's the coin chart. You can look at it while I talk Twitter real quick. And I'm also going to share a thread I've written on Coinbase. I'm going to pin that on the spaces. So you have that. Okay, so there's that. So Twitter. We've got this question, I think, a few times already this week, especially after CEO change with Jack leaving. A lot of people are anticipating, a turnaround with more attention towards Twitter because Jack was running two companies. As I mentioned earlier in the space, the challenge with Twitter is, again, and this is my personal opinion, it's not saying that you can't get this trade right, Benny, but it's more so just kind of a thought. Did we lose Benny? Do you see him, KT?
I don't see him. I think we lost him.
All right, I guess I'll answer the question anyways. I share the coin chart, so that should answer the second question in terms of price action. But the thing with Twitter, I think, is that it's more of a readership application than it is a viewership. So think of Instagram, you're kind of viewing photos, taking actions, looking at in YouTube, you're viewing videos, you're taking action on ads before the video. Whereas Twitter, you're coming and scrolling and reading, right? Kind of different in terms of the usability of the applications, as well as it also correlates to the ads you're seeing, right? I mean, Twitter, honestly, I think Facebook has mastered, everyone knows Facebook has mastered ad implementation into their feeds. Again, I think you're called to take better action on Facebook than you are in any other social media application. That's why they're one of the best. So I think that's one big challenge. Second is they're trading at their IPO pricing. I mean, you can argue their sales have grown, so they're actually cheaper than they were at IPO, but essentially the stock hasn't moved. The challenge is a lot of people are kind of excited for Twitter going forward. I mean, I love the platform. We use it all the time. The issue is they haven't proven at scale that they can generate or compete with some of these other social media applications at scale, I think is the biggest challenge. And second is they've tried and tested so many features, nothing's really clicked yet. Not saying it's not possible; it's totally possible. That's the reason this company and this platform is so strong and still running, because it's a great tool and great application. But they need to build new legs, right? That's what you've seen with Facebook, whether that be, they made some smart acquisitions and integrated that really well with Facebook. But even Facebook in general, I mean, what it was in 2010 versus what it is now, totally different. Like night and day different in terms of the feed, the different features that it has, the things you can do in terms of Facebook Marketplace, Facebook Watch, the ads, like I said, the integration there, even the like button. I mean, I don't know if anyone's seen the documentary on Netflix, on media in general. Facebook invented the like button. It's insane. So, it's thought of like very naturally now for any application, but Facebook like literally made that up. So there's a lot that Twitter needs to kind of prove or showcase for me to believe in the company from an investing perspective. So that's kind of my thoughts there. KT or Luke, I don't know if you have anything to add.
Yeah, just a couple of points, right? Like when you're investing, just try to see the trend as to where people are putting their time on social media, like especially how what you just mentioned, Rahul, like, people are moving away from reading, and Twitter is a reading feed, and why Twitter Spaces is so popular is because people like just to listen and
social
read about
commerce or
something.
social podcasting has become so much bigger. Yeah, you're right.
Yeah, exactly. So will Twitter make a shift in that, and if what is the shift that they're going to do and pivot to in the near future is what is going to decide the stock and the company itself. So for me right now, if you're investing in Twitter, I don't see a catalyst at all, in my opinion. But that's just me.
I think it's just the hope of the company turning around. It sounds like.
Yeah, I mean, again, it's me who did not even invest in Snapchat because I just thought it was a weird app. So, but anyway, that's just my point on Twitter right now.
Yep, I think I answered that. I think options, Ricky, did you want to ask something?
Yeah, Benny asked something regarding Coin 2022 calls, right? And the play
Yes.
that I just want to share my thoughts on it based on risk. The stock went from 240 to 360 just within a month, and that raises the option pricing a lot because that's a big move, right? So obviously the IV increases. But to Coin, in order to play for 2022, the way I personally would play it, instead of buying calls alone because they would be expensive, I would start off with the bull spread. Let's say 6 months out, you buy the 280 calls and maybe you sell the 310 calls. The reason for that is, let's say if Coin bases here or maybe goes further down, and you still believe in upside in the coming months, you can simply buy back the 310s for cheaper now, locking in profits on those, and your 280 calls now become, like you pay less for those, and you can hold on to the 280s and then manage those, right? And I think that's and then turn them into calls alone. And if let's say the stock goes up, then you're in the position anyway. You do make profits, right? So sometimes it's just okay to go the spread. I think it limits your potential on the profits, but it cuts down your risk. So coin, that's how I would play it based on the options. They're very expensive right now, so I would do a bull spread. And if it bases, just buy the other calls back at a cheaper price on the time decay and hold on to the close to the money calls.
Awesome. Thanks for sharing that options, Ricky. Johnny Rocket, I see you have a question. Just 1 second. We just had a few speakers ahead. I think let's go with Ren, Algo Strategy.
Yes.
Go ahead.
Yes. Hi. Thank you, Rahul, for hosting and everyone
welcome.
for speaking. It was very informative. I have a question for Problem Sniper here. When he was talking about his strategies, and correct me if I'm wrong, but he mentioned that in order to find a support line, he would use a combination of like a trend line with like a resistance level. Would you say there's any other factors that you use to like find key support points?
Yeah, so there are different ways you can find support resistant points, right? Like I use price action, right? Like I use the top of the wicks and bottom of the wicks and try to figure out where the support and resistance lines are. And some people kind of go with the bodies of the candles, and some go with fibs, right? Like whatever you're trying to do, just do it consistently. Don't try to employ 2 or 3 methods into the same thing, and one tells you contrary to another, and you're like stuck in middle trying to figure out, okay, what is happening. So whatever you're trying to do, just do that consistently and draw your patterns, right? Like what Luca kind of mentioned before, your descending wedges, your ascending wedges. Draw your wedges and draw your trend lines based on how you do it, right? Like again, do it consistently. Some people use the bodies of the candles to draw your wedges. Some people use the wicks to draw your wedges. So based on your wedges and your support resistance levels, if a particular resistance and a support level kind of coincide with a wedge break or a wedge support, that is where I kind of take a backtest entry or a breakout entry. And based on like how I kind of know that there is a breakout is based on the volume. Like if you're seeing like every single time, like right like I kind of post this out mostly in my Discord and all, where we are seeing the break of this level, and now we are also seeing the increase in volume. That means buyers are trying to push this up, and that's how I kind of figure it out. So I hope that answers your question.
Yes, it did answer my question. I just want to clarify one thing. You mentioned before that you also use fibs, right? So that would imply the Fibonacci lines, or did I?
Yes, it's a Fibonacci lines. I don't use fibs.
Okay.
Yeah.
Okay, perfect. Thank you so much.
Awesome. Thanks a lot, Ren. Chirag Patel.
Hi guys. Rahul, thanks a lot, and everyone else for holding the space. Quick question. One was a short one. Problem Sniper, you were mentioning that you use you said Tradalytics. Did you mean Tradytics or Tradalytics?
Tradytics, yeah.
Tradytics.
Yeah.
Okay. And the other question is more like on some of the fundamentals. So when I write like weekly puts or weekly covered calls on, let's say, something which is kind of volatile like Tesla, I end up immediately going deep down in negative, and sometimes it's just a psychological game. You just have to be like patient and wait till Friday, and it comes back in positive, and you either buy it at close or you take a little bit of a loss, or you wait till you get assigned or you exercise it. But is there like any science behind what delta should I consider for a slightly volatile stock versus a highly volatile stock when I'm looking for either selling puts or doing covered calls? Any tips there would be very helpful.
Sure. So this is not something that I do in a regular basis. Like I'm only a seller when there's a big shoot up. I'm very conservative with respect to that. And I don't usually do it, but I have seen some of my friends do this quite a lot, where they kind of see, like, they draw these patterns. Hey, like right now, if you look at Tesla's chart itself, it's like in a no man's land. It's going up, coming back right down, going up, coming back right down because Elon Musk was selling or whatever, right? So what they kind of identify with respect to these patterns is they say, okay, this stock is in no man's land. It won't go anywhere until and unless the macro kind of improves or like things like that. And they usually tell me like these guys are people with a huge capital, at least 10 times of what us retailers do. But what they kind of do is like they say there's there's more opportunity to selling calls and puts than buying calls and puts. I don't understand the reasoning behind it because like when I'm buying a call, I go 5x, 10x, 15x, 20x, whatever that is. But when you're selling a call, all that you can collect is the amount that you sold it for. So that doesn't make sense to me. But what these guys kind of tell me is there's so many stocks that are just in range and they don't break out or whatever, and they identify those stocks, and they when they are like at a resistance level, for example, and they don't see. I think that it's the flip psychology where they say, okay, there's not much interest in the stock and it's like at the resistant level or it's somewhere in the no man's land. I'll sell calls or I'll sell puts, and usually they sell calls. That's what I kind of see. But like they sell these calls and they're like, okay, whatever. I'm just going to collect these premiums, and if the stock is going to go up, this is a good stock. And if it's going to go up, it'll go to this particular level or whatever in this particular swing. So exercising these calls, even though I exercise them, I will be profitable in this particular scenario. So they have these models that go into it. I'm not that of a pro to actually understand those models yet, but they do this quite a lot with respect to how much capital they have. But for me, for the capital that I have, I can't risk that much, or like I can't quite understand that yet.
So one quick short follow-up question is like, how far out of the money do you go then, Problem Sniper? If you don't use delta, then how do you determine?
So for me, when I sell my puts is usually when I know that that the stock will definitely not go there. For example, I usually do that with Apple and Tesla because I kind of I'm very successful with these stocks, and like those are my go-to stocks for and I kind of like do really well in any kind of a market. And what I kind of do is like I draw major support levels based on my monthly and weekly charts, and those usually tend to not break as fast. So so that's where I think the premiums decay pretty fast, and especially when there's this queue, right? Like when there's this puts to calls queue that we are seeing, it usually means that the premiums have been artificially inflated, and how do I put it? Like they're not priced right, and that's the advantage I try to take when I'm doing that.
All right, thank you so much. Thanks everyone.
Thanks, Chirag, for joining. NPC 324622.
Hi, I was just going to ask for your guys' opinions on what option strategies you employ when looking at the meme stocks, like when DWAC ran or GME or MC.
Interesting question, but this is, both the times when Tilray in 2018 or GME ran, both the times I was in naked calls. So that's about it. I'm just basing myself off everybody else. Like everybody's saying these will run. Yeah, sure. I put in some capital in and probably get out. But like when there's a run and when there's a momentum like that, just stay on the right side. Don't try to guess anything at all. Make your money, get out. That's my strategy.
I think you played the GME trade, right? Problem Snipe. I think you crashed.
Yeah, I put in 20,000 because Thomas said, I'm
Thomas put the 500K trade. Yeah,
exactly. He said that. I just put in that, and next day it was about 15 times or something.
It's insane, man. 20K quick swing for KT. This guy's amazing. NPC. It's a brief answer, but hopefully it helps. SpaceX fan, what's going on?
Hey, thank you guys for hosting this. A quick question I had was on Disney. Like, do you think those are like the recovery names, or like as the theme park business is now getting back, or it will? Is this like there is minimal downside and maximum upside on those stocks? And like have stocks like Home Depot, Walmart, and those finally reached their fair value, or do you think like this might mark where they can get at least like for the next 3 to 5 years?
So Disney, I'm not sure why that stock is trading like what it is. Disney is not a company that relies on its parks anymore, right? Like it has diversified and has pretty good penetration into streaming and also now into metaverse also. But again, I don't follow that stock as you know clearly, but. Will it get broken down again? If Fed starts tapering, everything will just fall. There's no value. There's no nothing like that, right? Like everything I think will fall. Um, um,
Can I jump in real quickly, KT? Because I
yeah.
think it's a really important point that you brought up. If you are looking at individual stocks in the current market, right? Again, none of us are pros, so don't, none of us are acting perfect at this. I'm going to pin a thread that I know a lot of people found helpful. It's the reason I'm sharing it again. Everyone is trying to compare what happened now to 2018. First of all, the variables, the dynamics are very different. I went very in depth with a lot of data. This thread is pinned above. It says 2018 versus 2021. Or actually, no, it's the actual thread says seeing a lot of comparisons being drawn to the markets to December 2018. The reason people are comparing to then is because, look, I see your hand. I'll get to you next. The reason people are comparing to then is natural human psychology and trader psychology is, well, when was the last time we had something similar to this event, which is AKA rates and potential QA tapering coming to an end. So you're trying to compare to them. The challenge now we're having is there are so many different variables and so much going on. It's just unreal and very difficult, unprecedented time to compare or contrast from, because there's like, how do you kind of draw this line where the Fed has to pull back, which they're trying to do. In reality, they probably should have done sooner. So how will stocks react? Which stocks are going to rebound? When they're going to rebound? It really is going to be dictated by macroeconomic policy, right? The fuel up you saw from March 2020 to now was driven off the Fed. You had the most accommodative Fed probably, possibly in the last many years. I mean, they've been pretty accommodating overall in the past decade, but this was insane, right? They bumped up their asset purchases monthly, which is that's what tapering is about, right? You're tapering down the asset purchases, and they controlled the rates down to zero. Essentially, the cost of capital became free, right? So when you have the cost of capital becoming free, you have the Fed taking on a lot of assets. The market can run up with unreal expectations, and that's what you saw. And that's what you saw with price to sales just exploding. And the first thing that happened when the Fed became hawkish is multiples compressed. So multiples compressed because you have to put a multiple on a company, the price you're willing to pay now versus future growth, if there's an actual interest rate or a yield being offered in different asset classes. So I think anyone looking at any specific stock right now, the key thing to follow is understanding how tapering, rate hikes, quantitative easing, quantitative tightening, all of that works, understanding historically how this has kind of affected the markets, and following what the Fed is going to say, right? It's a very simple, theory. A lot of people say, don't fight the Fed, right? Everyone that fought the Fed, tried to short QQQ, called the top for the past year and a half, has failed. Until now, because the Fed finally changed their tone, middle of November, caught the markets off guard, went a lot more hawkish than anyone would have expected, and that's what the markets hate. Markets want clarity. You can trade on data. You can't trade on uncertainty. So that's kind of my 2 cents there. Go ahead, Luke.
Yeah, so I think the original question was in reference more to the long term on like Disney and Walmart. So I'll touch on those 2 names just quickly. So I take a look at Disney, and first off, I take a look at the chart, and it broke that 170-ish area that was acting as a support for quite a few months, pretty much throughout the entire year up until the very end of the year here. And when it broke that, I mean, huge gap down, and then it's just continually moved to the downside. Now, you're asking about the long term. In the long term, Disney, it's not going anywhere. So if by long term you mean 10 years, I don't think probably it's a bad time to pick some up. You're picking up after a drop from 180 to 150. So Long term, say 5 to 10 years, I think you're fine. Because at the end of the day, Disney's not going anywhere. It's an iconic brand. I personally think they're the king of streaming within a few years. I take a look at their streaming platforms, multiple: Hulu, ESPN Plus, and of course Disney Plus. And I do not think that company is going anywhere. So for the long term, I think you could have a small opportunity here to nibble on some shares. Now on Walmart, this was one I was actually talking with a fellow Pound on the Table team member about Riley last night. I'll drop his handle. Maybe Raul can pin it up top. But he had an idea on Walmart. And if you take a look at Walmart, compared to names like Costco, compared to names like Dollar Tree, those names have been moving to the upside, but Walmart's kind of been sitting still. And the reason those names have been moving to the upside is in part because they have pricing power. In an inflationary scenario like this, you are seeing Costco and you are seeing Dollar Tree. You're seeing them raise their prices. But guess what? They're also getting some margin improvement with that pricing power. And therefore, those stocks are moving to the upside. So, in essence, the argument in the conversation last night was, for the long term, Walmart's a solid company. They're pushing in the e-commerce. They're pushing in all these areas. But also, in this scenario, in the economic scenario right now, they have pricing power. And Walmart is lagging its competitors. So you could have a potential sympathy trade here on Walmart, and it could fall to the likes of Costco and Dollar Tree and those type names, because those names have been moving to the upside. They're pushing all-time highs, but Walmart's been stagnant the past few months, consolidating. Maybe there's an opportunity there. So the level I'm looking at on Walmart is 135. It's acted as a consistent support over the past few months, quite a few months actually, and it just recently bounced off that 135 area not too long ago. So I'm watching 135. I like the fact that Walmart closed up over its 9 EMA. That's a net positive for me. It looks like it's finding support there once again. So you could have a solid trade on Walmart, not only for the shorter term, but also for the long term. It's just something to pay attention to, in my opinion. You also take a look at the overall makeup of the market over the past month, and money has been flowing that way, and it's mostly because of the scenario we've been in. So I bring up a performance map of the past month, and what do I see? I see names like Home Depot, Lowe's, Procter & Gamble, Costco outperforming, and I think Walmart has a potential to basically be a sympathy play to that trade, and it's mostly because people are getting a little more defensive. They're investing and they're allocating capital to the basically outlook that they see, this quicker taper and possible rate hikes upcoming. So that's just something to pay attention to. But I do like Walmart long term. It's another one of those great companies, iconic brands that's not going anywhere. And if you have a 5 to 10 year longer term horizon on it, you're going to be just fine, in my opinion. Those names are going to continue to be successful and move to the upside.
I'll just add one more point to Luca's point, right? Like Walmart, if you go to Dollar Tree, it's not Dollar Tree anymore. They have hiked their prices. So with respect to Walmart, they didn't hike them at all, and the reason is they have a huge supply that they are holding on to, and what they're currently doing in the market right now is attracting people in, and they are expanding their consumer base, is what I kind of think. So Walmart is definitely a good, I think, in my opinion, is a good, short-term, long-term kind of play, and also something that I'll also say, like, you can also see them in one of my tweets or in one of my trade logs that I post. I'm into Walmart calls, 147 calls into December. So yeah.
I have a question for options, Ricky. You were talking about the coin strategy a little bit ago, and I just want to know which one, how far the spread would you play, and the entry for that strategy.
Hold on 1 second. Hold on. SpaceX, does that answer your question?
Yeah, it does.
Awesome. Thank you. Go ahead, options, Ricky.
SJ, on the coin, basically what I was saying, if you look on the weekly chart, is back into the base, right? And here, personally, avoid playing calls or puts because there's not really any direction here. But for some reason, if you believe that upside is going to come in, maybe Bitcoin will be strong, whatever it may be. Personally, I would go at least 6 to 7 months out. I would probably buy the 300 calls. Now, the 300 calls will be expensive. So what I want to do is lower my cost. And I will probably sell the resistance 325, 330 calls to finance my $300 calls. Now, if the stock moves in your direction while you're in the spreads, where you make your money, the limit is obviously but if on basis for let's say 3 4 weeks, it doesn't move much because it's in that zone now.
I think you're breaking up, options. I think we lost options, Ricky. SJS options trader. I don't know if that answered your question, but just to keep things moving, Greg Goki, go ahead.
Yeah, thanks, guys. Quick question around just trading strategies in general. Like for you, Raul, or Tony and team, do you guys employ the strat whatsoever? If you're not familiar with the strat, it's basically time frame continuity, the idea that broadening formations exist, and just you're basically looking at price action in a different method.
I personally don't. My strategy is a bit different than Tony's and I guess KT's. My focus is really understanding what companies I want to be invested in the longest time period I can. A lot of the companies I've owned for probably 1 to 3 years, if not longer in some cases. So I do know there's a lot of different techniques you can put in, right, Greg? I think there's so many different ways to, as Tony mentioned, right, there's different ways to skin the cat. But with my focus being not as much on day-to-day movement or option trading, I mean, the only options I trade are covered calls, and that's just to collect premium. If there's a move in a company that I'd like to see, and that was also just because that was I was doing in the past few years. But in my new job, I actually can't trade any type of option. I have a restriction there, as well as a 30-day lockup to any equity I buy. So any move I make is very, I guess, long-term focused. I do look at moving averages. I like looking at the VWAP off of certain events. I think that's one thing I like to employ a lot. The volume shelf and then move kind of moving average there, and then drawing that line as an anchor to any previous catalyst. So, for example, in this year, you can look at like March through May, there was many drawdowns, so drawing it to that, or to last year in elections, or March 2020, whatever that might be, and understanding the 200-day moving average as well as institutional investment in the company, just to see how backed it is and who's backing it. But in terms of strat, no, that's not a method I employ specifically. So again, not a direct answer there, but that's just kind of how I'm looking at stuff. A lot of my positions are growth related. So, you have the typical FANG names, Apple and Microsoft that I've held for many years. And then some futuristic growth companies that I see, I just said over a year, Square, Twilio, NVIDIA, Tesla, Airbnb, just to name a few. I think I have like 28 or 29 total positions in my account. Problem Sniper. I don't know if you employ that strategy. Go ahead.
So I started being a full-time trader this year. So it's mostly I'm trying to expand my horizon too. And one of the things that I am trying to employ is looking at these inside days and inside weeks, which specifically it's interesting that Strat also has a very similar kind of thing, or it's the same. And they are clicking. I mean, it is working out where you break a particular range of the previous inside day, it goes to the next, like the next price target based on that, and it's kind of working. I don't know the consistency of it yet. I recently started employing it this week, employing that strategy this week, so this year. So I think whatever based on my experience, I think whatever you do, just do it consistently, and you'll be successful with it. So,
does that answer your question a little bit, Craig?
Yeah, it does. No, I appreciate it.
Yeah, awesome, man. Thanks for joining in. Appreciate it. All right, next, I think Donnie. What's going on? Safe Moon, Donnie.
Hey, what's going on, guys? I appreciate all the insight you guys provide and the education. I like to consider myself a fundamental-based trader. So I'm just trying to, in this market, I'm trying to get into the volatility, trying to do more options and scalping and trying to use more TA. So I guess my question is, when you guys are scalping intraday options, what is like a setup that you look for? Are you using like EMAs? Are you using RSI? Like, what makes you enter a trade? Like, what just any help would be much appreciated.
KT, want to take that one?
Yeah. So So Donnie, I recently tweeted out about an SPX trade as to how we made a 400% trade in a few minutes going into Friday close. So what I'm trying to do is I'm looking at the 5-minute chart, and
I've pinned that tweet above, by the way.
Oh yeah. So I'm looking at the 5-minute chart. I'm trying to figure out where exactly. I'm trying to figure out the pattern as a day as a whole. And also, I'm trying to figure out if there are micro-term patterns that are being formed, right? Like if you're trying to see lower highs and lower lows, and you're inclined bearish, right? But then when you look at how are we materializing on top of these support resistant micro-term support resistant levels that you're looking at, and if there's a pattern that's being developed. And if there's a pattern and then you see a falling wedge, you see an inverted head and shoulders, you see head and shoulders, you see different patterns even on that micro term 5-minute charts. And what I kind of also say is, if you're looking at a 5-minute chart, you're trying to predict a 10-minute time frame as to where the stock is trying to go. If you're looking at the daily chart, you're trying to look at a couple of days out. If you're looking at the weekly chart, you're trying to figure out a couple of weeks out. So whatever time frame you're looking at, like two, and trying to predict where things are trying to go, and if they are materializing in that aspect, is when you try to get in and out of scalps. And that's how I kind of do it. And that tweet that Rahul just penned, I think it's pretty helpful in how I kind of navigate these scalping techniques, and how we kind of do that with 0-day SPX calls, Amazon calls, and things like that. And I usually love scalping these big names because they kind of move pretty fast when the IV is low. When IV inflates, you get that the sense of selling into strength and getting that extra leverage out of it. So
I just want to say that's a lot of help, and I do appreciate the insight. I will definitely be checking out your page and everybody here. So thank you guys. Appreciate it.
Thanks, Donnie. Thanks for tuning in. Trade ideas. Go ahead, and then we'll take Falgun as probably the last question. We've been going for a couple hours now, almost 2 hours. So go ahead.
Hi, can you hear me?
Yep, we can. Go ahead.
Yeah. My name is Manan. Thank you for letting me speak. So I just had 2 quick questions. One is just a general trading strategy question, and then another one is specifically a potential swing trade, maybe even a leap from here. I'm gonna start with the general trading question. So, something I've been considering, or I've been using in my trading strategy, is options flow, which I'm sure a lot of people on the call are familiar with. But I was recently in like a Discord conversation with the Discord owner owned like a huge Discord, so I assumed there was some credibility to that comment. They said they didn't really believe in it. They felt like it was a lagging indicator, or like just added confirmation bias, and it's open to manipulation. What do you think of like flow algo services, like let's say for example Cheddar Flow or TradeTix, and just learning how to read the options buying and selling of those premiums? Is it effective? Is it ineffective? Is it effective if you know how to read it in a certain way or with only a particular type of strategy? So that's my first question, and then my second question is, I was doing analysis on Meta, Facebook, and I feel like it's out of all the FANG companies, it's currently probably the least or the most undervalued, I would say, compared to where the fair value could be. And doing a potential, let's say, like leap play, or going on like a swing trade of 6 months out for Meta, and just like overall analysis on that company for a trade.
all right. So your first question about flows, you can't. So when you're looking at options trading, it's not a single dimension trade that you're taking.
Of course, yeah.
Right. So you can't just say, oh, I see this flow, I'm going in and
right. Yeah, I agree. Yeah.
So how good are these different tools that you're looking at? Is you need to understand that it's just a data point. It's one of the data points of maybe 5 of your data points, or 10, or whatever. But I try to keep it as simple as possible, so I kind of put it down to like 4 or 5. So
right.
If it does not, if there's a flow and if it does not align with your strategy, that just means like it's just noise at that point. If today Apple is at 180 and the people are buying in 200 calls for December 31st, I mean, being a bull on Apple, I'm not going to buy that at all, because I know that there's a resistance level that's major, that's coming up at 182, and if it breaks, probably I can take it. But if it's and it's so close that I don't risk my capital at all on it, right? So, but then again, they say, follow the whales and things like that. Yeah, you can do that, but try to understand why they are doing it. If you don't have the this is something that I kind of do when there's a big flow. I keep that particular option on my watch list. Right, like you can add a particular option onto your watch list, and I'm just going to add on top of it and say, based on how the price action is moving in the short term, how much of a decay, or how much of how elevated are these options staying when something like this is happening? And then you can probably kind of guess, like, okay, why are they keeping these options elevated? So there is some kind of a news that is going to come up, right? And then I did that with CVS trade recently, where I saw a downtrend, a falling wedge break, and it didn't break yet. It was just there, and I saw a huge volume flow into January 7th. Next year, and I was looking at the macro. I was like, okay, there's investor day that was coming up. It was Thursday last week, and I was like, okay, there is macro, there is flow, there is a technical chart that is trying to break out, which did not break out yet. So the premiums are not as inflated yet. So now all of this ties together, and what the result of that was a 4x trade. We were up 300% or so on Friday. So
Right.
like the are the flow tools important, and are they helpful? They are definitely helpful. And
Right.
and how do I take it? It's just going to be a data point.
Right. It's one factor among multiple factors in your analysis, but it's never the single factor influencing the entire trade decision.
Exactly.
Is basically what you're saying.
Yeah, I would think so.
Okay. Awesome.
You're welcome.
And,
Thanks and yeah, that Facebook question, I think Luca is going to jump in to talk a little bit Facebook technicals.
Awesome. Thank you.
Yeah, so you mentioned that you're kind of more of a fundamental person, and in essence that you believe Facebook compared to the other big time FANG names is undervalued. So personally, for the long term, I am myself bullish on Facebook. I do hold some, so I need to disclose that to people. I do hold some, so I'm going to be a bit biased. But the Facebook or Meta, you take a look at the social media space, and Meta, or previously known as Facebook, is still the king. It's still the king of the space. Instagram, Facebook, WhatsApp, Messenger. I mean, they literally they own the space at the end of the day. For instance, an example of how much they control the space and how much they truly affect the everyday. Not too long ago, it was a few months ago, Facebook was down. Facebook and Instagram and all their applications were down for, I think it was like 24 hours. And it was like the world was ending. I mean, the White House was even talking about it. And that's because there is a lot of commerce that runs through Facebook. You take a look, and 23.8% of total U.S. digital ad spend is Facebook. I mean, that's insane. So you take a look, and it looks like by the end of the year here, in the latest numbers from some sources, that Facebook's probably going to end the year with just about $50 billion in U.S. ad revenue. That's absolutely insane.
Right.
You take a look at this company and what they're doing, and really, I think what they're starting to realize is that a shift is coming. A shift is coming from basically typical standard social media that we have seen rise throughout the last decade to this more connected, virtual related type of social media. And that's why you're seeing Facebook make these huge investments in the metaverse and et cetera. But I take a look at Facebook. I take a look at the numbers. The balance sheet is solid. I take a look at management. And at the end of the day, Zuckerberg, love him or hate him, the guy has built a company that is an absolute beast. And really, a lot of the negative sentiment comes around policy. But this is how I look at policy and really my view on that. You look at what Congress has done when it comes to Facebook. What have they actually done in the past, say, 4 years that they have been criticizing Facebook as a platform? They really haven't done much. They do these hearings and they accuse Facebook of this and that. And at the end of the day, have you actually seen any legitimate policy come out that hurts the revenues of Facebook? Not really. At the end of the day, Facebook continues to grow. Their user base continues to grow consistently. Now that rate of growth has decelerated, but there's a certain point where a company like Facebook, they're not going to turn out 25-30% user growth once they hit the size that they're at. I mean, Facebook is absolutely huge. Really, how much more can they expand? But the ad spend continues to increase at Facebook. Management, like him or hate him, Zuckerberg has led Facebook to quite a bit of success, and he continues to. And I think that he is early on this VR AR shift that you're seeing all these companies move into. I take a look at the balance sheet. It's solid in my opinion. I take a look at earnings, and their earnings are pretty consistent. Every once in a while, there's a miss in one area or another, but they have been pretty consistent, moving to the upside, up and to the right. When I look at earnings, I like to see these trends over quite a few quarters, say 8 quarters. I like to see continual growth, and Facebook delivers on that. So at the end of the day, you take a look at Facebook fundamentally, and the company is solid. It's just these, whether you like or hate, it's this sentiment, it's this fear of policy that has really, in my opinion, been holding Facebook back, or this fear that the fundamental business of their social media platforms are going to slow down. And I do not see that, frankly. I mean, we were just talking Twitter on this space not too long ago, and we were like, how does Twitter advance? And Facebook invented the like button. I mean, there's your answer right there. Facebook owns the social media space. And unless you think that social media is going to go away anytime soon, which I doubt it is, Facebook is kind of a no-brainer. It's kind of one of those names I think you just continually hold for the long term. Every name goes through their spans of consolidation and lack of upside action. And I think that you're just seeing a case of that in Facebook, and people are justifying it with some fear. But that's just my opinion on Facebook. I like the company fundamentally, and I do think you're correct in the fact that it is lagging your Apple, your Microsoft, your Google, etc. So that's my opinion on Facebook. It's pretty adverse to a lot of people. A lot of people don't like Facebook. I personally like it, and I think there's some potential there long term.
Thank you,
I
Trader,
appreciate it.
for
Thank you.
joining in. Appreciate you listening. With that, Falgun, go ahead. Falgun Patel, are you there? I guess he's not there. Matthias, did you have a question?
Yeah, thank you. Thank you guys for all this input. I have a quick question regarding the leap strategy. How do you play this long-term call options? Do you ever consider buying the shares and raising the additional cash, or do you just play it for the capital gains?
So I kind of play that for capital gains, and this is something that I don't do. Like I can talk about this because I kind of see some of my friends do that. Like what they kind of do is they buy long-term leaps on particular stock based on the price targets. Like they usually go 3 to 5% out the money probably. And what they kind of do to average down or to deal with the decay over time is they sell shorter term calls against the longer term calls, and they do it. And yeah, I mean, it's hard to judge the market with options with going 2 years out or more than 1 year out. So what I kind of see is many kind of go with yearly, and usually that is capital gains that they realize at the end of the year.
Cool. Does that answer your question, Matthias?
Yeah, thank you.
Thank you. Thanks for joining in. Appreciate that. Falgun, are you there? Last chance before we wrap up here. Falgun Patel.
Hey, sorry, no questions.
No questions. All right, no problem. Thanks for joining in. And I think with that, I mean, we've gone almost 2 hours. This was amazing. We ran one yesterday as well. Thank you, everyone, for tuning in. Big shout out, KT, pounding the table. Luca, thanks for taking time out. Really appreciate your insights, and I hope you guys found this helpful. It is being recorded, so we will definitely post a recording as well. As I mentioned, we will be hosting a ton of spaces upcoming. Our next big one planned is Wednesday evening with some very amazing guests. So, give all the panelists, give us a follow just so you can keep up with what's going on around our spaces and keep up with the markets with us if you find it helpful, right? Again, this is just to provide our insights. No one has a crystal ball here, but hopefully these things are helpful, and we hope to continue engaging with all of you. And thank you for taking time out on the Sunday. So appreciate it. Any closing thoughts, Luca or KT? But with that, I think ready to wrap here.
I'm ready for my lunch, man. Thanks a lot for listening, and it was really fun.
I just, I want to thank everyone for listening to these spaces. And, this is what FinTwit's all about, sharing knowledge and just talking the market and money and, building out wealth. So I absolutely love it. I thank everyone for listening. And over the coming weeks, there's probably going to be quite a bit of volatility, especially this week with the Fed meeting. And I just urge, patience, and there's no need to rush to put capital to work. Just at the end of the day, just keep calm, keep your emotions in check. And if you don't know where things are going and you're not really a high level of conviction on where things are going, just sit out. There's no reason to put risk on when you lack conviction. That's just how I operate, and I think that's how the majority should operate.
Awesome. Thanks everyone for tuning in. And I think I said, Wednesday's our next space. I forgot to mention time, 6 p.m. Eastern. I'll be posting details about that space. Like I said, the panelists and that one is it's going to be a great panel. I think you guys will definitely enjoy it. So we will be posting details of that soon. With that, that's a wrap. Enjoy the rest of your Sunday, folks.
It's me. Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a